What if the hottest crypto move of the year is actually a trap, and you are about to walk right into it? Miss this detail, and it could cost you real money and your hard-won reputation. The surprise listing of the Canary XRP ETF on the Depository Trust and Clearing Corporation's platform has unleashed a frenzy. With XRP's price blasting above $3 and headlines tipping an ETF approval as imminent, traders are flooding in, desperate not to miss out. But is this the real deal or just another mirage? Here's the critical truth. A DTCC listing is not a green light from the Securities and Exchange Commission. As one analyst warns, the DTCC entry for the Canary XRP ETF does not equal official SEC authorization. It is only a technical step, not approval to launch or trade. The true decision still rests with the SEC, whose verdict could come by late October. Still, history tempts the bulls. Bloomberg's Eric Balchunas notes that ETFs on the DTCC rarely stay dormant, fueling hopes that a green light is near. This technical move can trigger FOMO and drive prices up, even as whales dump 40 million XRP in a day. Chase the hype blindly and you risk buying the top, watching whales exit, and getting trapped in wild swings. The real move could hit days or weeks later, or not at all if the SEC stalls or blocks the application. Confusing a technical checkpoint for the finish line can cost you more than cash. It can shatter your confidence and standing. So what exactly does a DTCC listing mean, and what are the hidden risks behind the headlines? Let's break down the real signals you need to watch before making your move. You've heard the words DTCC and ETF approval thrown around, but do you really know what happens behind the scenes and why the market goes wild every time these headlines hit? Let's break it down. The Depository Trust and Clearing Corporation, or DTCC, is basically Wall Street's invisible backbone. It keeps track of who owns what and helps settle nearly every trade in the United States. When the DTCC lists an ETF, like the Canary XRP ETF, it means the product is technically prepped for trading, but it's not a green light from regulators. In other words, just being on the DTCC list does not mean a new cryptocurrency ETF is ready to launch. Still, this step grabs everyone's attention. Traders see DTCC listings as crucial progress, often jumping in before the real news arrives. As one recent report put it, the Depository Trust and Clearing Corporation has listed the Canary XRP ETF ahead of the SEC's approval for the product. This kind of technical move has already fueled major rallies in the past. Remember when listings for Fidelity's Solana ETF, Canary's HBAR ETF, and an XRP ETF powered the September surge? But here's the catch. The Securities and Exchange Commission, or SEC, is the only group that can actually approve or deny an ETF. Until the SEC gives the official nod, these products can't start trading. The DTCC listing is like setting the stage before the curtain goes up. It shows the players are ready, but the show can't start without the director's call. Why all the fuss? Because the market is hunting for any hints that an ETF might get the go-ahead. Even a simple DTCC entry can trigger waves of phonal buying and speculation, especially when the SEC's decision is just days away. This is what happened with XRP. As soon as the Canary XRP ETF appeared on the DTCC website, momentum exploded, with XRP's price blasting past $3 for the first time in years. The risk here is huge. If you misread these signals, buying on a DTCC headline or selling out of panic if the SEC delays or rejects, you could lose serious money or miss out on the next big move. Some analysts warn that misunderstanding these steps is a setup for volatility. The DTCC move is a psychological trigger, not a regulatory finish line. Remember, regulators have cleared some hurdles for XRP, including ending the Ripple lawsuit earlier this year. But the ultimate decision on all these ETFs still belongs to the SEC. Until then, every headline is just fuel for speculation. So if you're thinking about trading these moves, be careful. The difference between a technical milestone and a true breakthrough could cost you your portfolio or make your year. But if the technical process is so misunderstood, why are traders acting like every DTCC headline is a golden ticket? Let's dive into how the market psychology and recent whale moves are driving this wild cycle of hope and fear. What if the crowd's excitement is exactly what the smart money is counting on? Miss this shift, and you could be left holding the bag while profits vanish before your eyes. Right now, XRP is grabbing headlines everywhere. The price just smashed through the $3 ceiling for the first time in years, and the sudden appearance of the Canary XRP ETF on the DTC list has set retail traders buzzing. On the surface, it feels like a green light from the big leagues, but beneath that excitement lies a risk that most are missing. Behind the scenes, the largest XRP holders are quietly pulling back. According to Sentiment, wallets between 10 million and 100 million XRP just offloaded 40 million coins in the past 24 hours. This heavy selling is happening precisely as retail FOMO reaches new heights, hinting that whales are protecting their gains while the crowd piles in, and your money could be the next on the line. But it is not just whale activity raising red flags. Massive XRP inflows into exchanges are setting off alarm bells, with analysts warning about the risk of a liquidity trap. If you are only tracking bullish headlines, you might miss that these surges signal some investors are preparing to sell into strength, all while retail buyers rush in, a costly mistake if you are late to the party. Institutional flows add yet another layer of uncertainty. XRP's surge past the $3 psychological barrier came with record high volume, which some experts see as a sign of big money moving in. However, even as institutions step up, whale wallets are showing limited appetite for holding through the volatility, cutting their exposure just as prices peak. This battle, whales locking in gains, retail traders chasing momentum, and institutions hedging their bets under regulatory clouds, is fueling the current chaos. Should the SEC step in with a denial or delay, those swept up by the hype could be left holding heavy losses. On the flip side, if approval lands, a sudden short squeeze could catapult prices even higher, turning patience into outsized profits. Here is the real risk of major players, and you might buy at the very top, losing your edge to those with better information. Blindly following the crowd leaves you exposed to a rally built on shaky ground, and the fallout could be brutal for your wallet and reputation. So what is the next move if the SEC grants approval or yanks the rug at the last second? Let us break down exactly how these insider moves could play out and what signals you should watch before making your next trade. The next 10 days could change XRP forever, but not in the way you think. The Canary XRP ETF has just appeared on the DTCC platform, sending shockwaves of optimism across crypto markets. But here is the reality. A DTCC listing is not SEC approval. It is a technical signal, not a final green light. Many investors are now betting big, but what actually happens next will hinge on the SEC's decision, expected between October 18th and October 25th as multiple ETF deadlines cluster together. Let's map out the futures ahead. Scenario 1, the SEC approves the XRP ETFs, maybe even in a batch like it did last year with Bitcoin and Ethereum ETFs. If that happens, momentum could surge, and XRP could retest its July peak near $3.65. Analyst Ali Martinez points to $3.05 as the breakout level. If bulls break above this, a run to $3.60 or even higher is on the table. Some sources even mention a $4.50 longer-term target. But here's the catch. Approval is not just about the ticker. As Cointelegraph notes, XRP could rally above $3, but for how long depends on more than just an ETF approval. Scenario 2. The SEC delays its decision, pushing deadlines further out. This is entirely possible, especially with the regulator's cautious track record. In that case, the market's euphoria could flip into frustration. Technical charts show XRP is holding above $3, but if that support breaks, a retrace to $2.80 is likely. Martinez warns that a drop below $2.90 could trigger a quick dip before any recovery.
The risk? Retail investors who bought the hype may panic sell, while whales who already offloaded 40 million coins might wait to accumulate lower.
Scenario 3. Outright denial by the SEC. This is the most bearish outcome. If it happens, XRP's technicals could unravel fast. Descending triangle patterns suggest a breakdown below $3 would accelerate losses. A flash crash to $2.80 or even lower is not out of the question. For those who went all in on DTCC hype, the fallout could be brutal.
What do these paths mean for different types of investors? If you are a long-term holder, you might see volatility as noise, unless denial causes regulatory dominoes to fall. If you are a trader, the next 2 weeks could be make or break. Correctly timing the breakout above $3.05 or bracing for a retrace to $2.80 could mean the difference between life-changing gains and devastating losses.
One thing is clear, making the wrong bet now could mean missing out on the rally of the year or getting caught in a violent shakeout. With so much at stake, it is no wonder that even the whales are hedging their bets. So how can you actually turn this uncertainty into a practical edge instead of a costly gamble? Let's break down realistic strategies you can use right now, whether you're a cautious investor or a risk-seeking trader, to navigate the chaos and come out ahead. Before you jump on the ETF hype, ask yourself, could a single misread cost you thousands or put you ahead of the crowd? Here's how seasoned pros read ETF tea leaves without getting burned, and why the stakes are higher than ever. First, know this, a DTCC listing is not the SEC's green light. As one analyst warns, DTCC entry is not an official SEC authorization, but traders often view such listings as a signal of readiness. The ETF showing up on DTCC's site can ignite wild market excitement, but it's only a technical step, not approval to trade. If you mistake this for a done deal, you risk overexposing yourself and missing the real move. Yet there's some reason for optimism. Bloomberg's Eric Balchinas notes, how many tickets are added on DTCC that are never launched? Probably almost none. Most ETFs listed on DTCC do go live, which is why expectations for a Canary XRP ETF approval are running hot. But do not get complacent. Regulators have the final word, and a surprise denial or delay could crush positions built on hope. So how do you play this without getting blindsided? First, weigh DTC listings in context. They signal momentum, not a guarantee. Watch the market. XRP's surge past $3 is bullish, but 40 million tokens just got dumped by whale wallets. Even the biggest players hedge when hype peaks, and you could too. Second, guard against ETF event risk by moving in or out of positions gradually. SEC deadlines for XRP ETFs cluster in late October. Volatility could explode both ways. Oversized bets on headlines alone can backfire. History shows markets often front-run news, then punish latecomers chasing hype. Third, silence the noise. Hype cycles lure even experienced investors into FOMO trades. The real danger? Not missing the breakout, but getting whipsawed by a false signal. Stay disciplined, stick to your plan, and confirm every signal before you act. If you fail to separate hype from substance, you could end up holding the bag while others cash out, or worse, miss the real opportunity when it finally arrives. But what actually happens when the SEC makes its call? And how can you spot the earliest signs of a genuine green light? Let's break down the real triggers that separate winners from bag holders. The next market move belongs to those who see past the headlines. Right now, the market is wired on adrenaline. The mere listing of the Canary XRP ETF on the DTCC has sparked a surge in optimism, with XRP breaking above $3 and talk of new highs dominating social feeds. But here's the real tension. This listing is not an SEC greenlight. It is a technical step, not a trading approval, and that difference can be the line between profit and pain. Remember, traders who chase every bullish signal risk becoming the exit liquidity for bigger players. Even as XRP climbed past $3, whales offloaded 40 million tokens in just 24 hours, showing that big money often moves before the crowd. The cost of complacency now is not just missing a rally, but getting caught by false signals as the noise drowns out the facts. If you let hype guide your decisions, you are surrendering your edge to those who dig deeper. The market is a battlefield, and volatility is not a weakness. It is a weapon for those who challenge the obvious and think 2 steps ahead. Do not just chase signals, question them. Use every swing, up or down, to sharpen your strategy, not to lose sleep or stake your reputation on someone else's euphoria.
The story does not end here. SEC deadlines are fast approaching. In the next section, we will break down what to watch for as the October decisions draw near and how to prepare for both the upside and the risks.